Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 13th of September. Now the new trading week is not all that different to how markets left off on Friday. Fairly downbeat sentiment, certainly with regards to how the markets were viewing the dollar and now equities as well, because the dollar has been starting to regain some ground and that has continued into Monday morning. Little downbeat negative sentiment. You've got pickup in inflation, you've got continued hawkish updates from FOMC members, which markets are now starting to take as negative as well. So that negative sentiment driven through equity markets last week, just on hold a little bit this morning, but can that support start to build is the question. Now, the inflation pickup that we saw on the PPI basis, the producer prices inflation basis, is now turning to the consumer prices this week. So how does that impact on the dollar, and also how sentiment is impacted through that as well. Now, the Federal Reserve members are into their blackout period this week, so no more Fed comments in front of the FOMC meeting. But as I said, fairly hawkish pretty much across the board at the moment on those Fed member comments. So no data points to really get too worked up about today, so nothing really to change this sentiment. But as I said, a little bit of a pickup on equities, but is it a sustainable move is the question, because the dollar continues to strengthen. So with regards to the charts we're looking out for today, we've got euro dollar, which is now starting to break down. I said that dollar strengthening. Well, it is breaking down on euro dollar now. 118 big figure support broken this morning. Let's see how it impacts on the technicals, and also looking out for the oil price. Well, oil has actually picked up, but again, is this a move that can be sustained? And also there's key resistance overhead. And also now looking out for the SP500 futures, where we've had a correction back in the last few days. Is this the time to buy? Because it's coming into a key support area. Let's have a look. And onto the Infinox MT5 platform, and we can see that euro dollar had consolidated actually on the back of that ECB meeting that we had last week. There was a bit of mixed signals coming out of the ECB, but essentially there was consolidation. But into Friday's close, it sort of drifted back towards 118 again, and that has now level has been broken to the downside. We can see that that is taken through the 4-hour chart decisively actually, and it's continuing as we go today. Now, essentially, I'm taking this as a bit of a range play on euro dollar now, between that 116.60 area and 119 figure area, and breaking down below 118 big figure, which was an old resistance, became supportive, but breaking down, essentially that's a pivot area now, and breaking down below that, you can see that the next real support comes in at 17.35. Looks like we're on towards a test of that. Certainly if you get a close below 18 big figure, it looks like that's on the way to 17.35 and a test of that. But certainly on how the market has reacted into Monday morning with a more negative outlook through that 4-hour momentum indicator, the RSI, looks as though that the selling pressure is starting to build on euro dollar. And on that oil price, well, we've seen very choppy moves actually throughout the past week, 2 weeks. Throughout last week, actually, alternate negative and positive candles. Positive candle into the close on Friday, and a sense of a positive candle today. But even then, I'm not really massively trusting this move. I mean, it does seem as though that anything around the sort of high 50s is a struggle for the RSI, even though, I mean, you look at that tight ranging configuration there on the RSI, but this is still ranging for me, and I wouldn't be getting too excited, and you'd need, I think, a decisive close above 74.20 to really suggest this is moving higher. But essentially, I think that this is still ranging. It's a little bit more positive, mind you, but again, with the negative outlook that we have through markets as a broad sentiment basis, I would be a little bit cautious, but chasing oil too much higher, and I think that this needs to be watched and be a bit cautious on any sense of a false breakout could be seen. And finally, on S&P500 futures, let's just take it back one more level. I've got these green circles here, 1, 2, 3, 4 in a row, where we've seen the unwind towards 45 to 50 on the RSI, but also a handful of negative sessions in a row that find support and then go again for the next bull run. And it's interesting that they all come around this 55-day moving average. That is, to be honest, it is a little bit lower, but also around this uptrend as well. It's had a retreat back towards an old key breakout as well. It's basis of support there. So a collection of reasons why this is a crucial medium-term crossroads on the S&P 500 futures. If it starts to find support again, it could be a really good opportunity to go again. But we need to be cautious because obviously this has been a selling phase for the market, and the support isn't yet determined, not definite really. So we need to start to just be a bit more cautious and see a new buy signal coming through. You've got the resistance overhead at 44.86. You'd want to see that RSI on the 4-hour chart back above that 50 mark as well to regain more positive sentiment. Thanks for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where we'll be wading through a whole raft of key tier 1 data and the impact on major markets. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much.